My name is Velenasi Kangwa, bringing to you examinations answering techniques for DA8 as well as CA 2.1. And as we look at these techniques, some of the common general issues that we are going to cover include talking about the exam format for the two papers, the topic weightings, the techniques that you need to actually apply to maximize your chances of passing these exams. I'll be talking about the use of 15 minutes reading time in the exam, the general competencies that are required for you to actually maximize your chances of passing. I will also talk about common command words that are used in the examination papers. I will talk about the highly examined standards. Standards are many. Some of them, they rarely feature in the exam, but those that are always there in the exam, we'll be talking about them. I will also talk about common mistakes that are committed by candidates, and these would have been extracted from the reports that are usually prepared by the examiners, the markers at each marking session. And then at the end of it all, we shall do some question debrief so that I explain to you some of the mistakes in practice that have been committed by students that have written these exams before. So for example, when we talk about examination techniques, what are we talking about? This is basically what a candidate must do or must avoid doing in an exam if they are to maximize their chances of passing. So at the end of these techniques, make sure that you do apply them so that you are not found to be one of those that would fail to make it in the exam because you did a wrong thing or you may have avoided doing the right thing. For instance, our exam paper format, DA8, it has two sections, and these are Section A and Section B. In Section A, you have compulsory questions that are two. Traditionally, both of these questions come from known topics, and these topics are consolidation and single entity published financial statements. So it is very easy to pass this exam once you are able to maximize on these well-known topics that are going to be in those compulsory questions. Section B is going to usually contain questions from individual standards, a conceptual framework. Many times these require a lot of explanations as well as a bit of computations. Ratio analysis as well are questions that you find in Section B. You need to choose 2 out of the 3 questions in that particular section. Exam duration is 180 minutes. Okay? Writing time and 15 minutes reading time. So what it means is that for each mark in this exam, you need not spend more than 1.8 minutes. If you are going to attempt a question, for example, that is carrying 25 marks, you need not spend more than 45 minutes on that particular question. If you do that, you are putting yourself at a risk of failing to attempt all the questions that you are required to attempt. For 2.1, Section A has a 40 marks compulsory question. So for 40 marks, what it means is that you cannot spend more than 72 minutes on this particular question. It's compulsory and it's quite heavy. Many times this comes on one topic and this is consolidation. So you do well to make sure you're comfortable with this particular topic. Section B will come from various areas, including individual accounting standards, ratio analysis, cash flows, conceptual framework, and regulatory framework. Many times, candidates do not perform so well from the Section B type of questions, and so it's important that as you prepare for this particular exam, you make an effort to try and cover all the topic areas that are contained in the syllabus. The same thing, the fact that it's 1.8 minutes per mark, and these are a 20 marks question in section B. So you are not expected to spend more than 36 minutes on each question in section B. The moment you do that, you put yourself at a disadvantage of having to attempt other questions. Failure to complete an exam by attempting all the questions is straightforward the risk of failing that particular exam. DA8 has got topics that have different weightings. By virtue of the weightings, it actually prescribes how much time you need to allocate to cover that particular topic. So these are the weightings. Conceptual framework is 10%. So out of the total hours that you spend to study, 10% of those hours must be allocated to conceptual and regulatory framework. When you look at the area that has the highest weighting, this is the single entity financial statement. Now, for the single entity financial statement, it's not just bare financial statement, but you are actually expected to know all the individual accounting standards, because it is the individual accounting standards that you are going to use to prepare these financial statements. And this is one area where a lot of candidates have strong weaknesses, actually. And so by virtue of having weaknesses with individual accounting standards, it automatically entails that you are actually not strong when it comes to questions in the exam that require the preparation of financial statements. The CA 2.1, what are these syllabus topics and the weightings? So the syllabus topics, for instance, I'll focus on the one that has the highest weighting, which is financial appraisals. So under financial appraisals, we are looking at ratio analysis, analysis of performance of an organization. So this area has continued to actually record poor marks from the candidates that have sat for this exam before. Many times, candidates are good at just calculating ratios and not interpreting what that particular ratio stands for. And so you can see what is required is quite a larger percentage, and so you need to actually exert a lot of energy on coverage of this particular area. Consolidation, which carries 40 marks, is just a 25% of this particular weighting, meaning there is actually a lot of easy things that you do as compared to what you are required to know on appraising the performance of an organization using various ratios. So let me talk about what a candidate needs to do to actually adequately prepare for these two exams. So the techniques apply to both the DA8 as well as the 2.1 papers. So firstly, as a candidate that is about to sit for these exams, ensure that you cover the entire syllabus. You don't need to do handpicking of topics when preparing for this particular exam. Study the entire syllabus, because examining is not specifically on a few topics within the syllabus. And as a candidate, it's difficult for you to know which accounting standards are going to be examined in this particular exam. I know quite all right, there are some areas where it's predictable that this particular question comes from this topic. But other sections, you cannot say question 4, question 3 will be on this particular standard. So there's no room for you to handpick the standards or the topics that you are going to cover. Make sure you carry out what we call question practice. Adequate question practice under exam condition standards is very important. What do I mean when I say under exam condition standards? When you get a question, attempt to answer this particular question. If it's a 25 marks question, sit down consistently for 45 minutes and attempt the question in full. check how you fare. Many times these questions have a lot of answers that have been posted on Zika website. Check how you have fared by comparing your answer with that which the body has posted on the website. When you see the consistency in the answers, it's a sign that you are actually progressing well. What is unfortunate is that you cannot go to attempt a question in the exam consistently for 45 minutes for the first time. You need to do that a lot of times during the preparatory period for this particular exam. And the more the questions that you attempt under exam conditions, the higher the chances of you passing. Practicing questions under exam conditions will actually improve your speed, widen your understanding, and will also enhance some confidence from you as you face this particular exam. And you need to do more practice of questions from topics that you think are difficult to you as an individual. Do a lot of practice from questions that are coming from that particular topic. You need to read examiners' reports, which are always posted on Zika website. It is from these reports that markers are going to explain to you some of the common mistakes that have been committed by those candidates that have gone before you. And get a lesson from that. Make sure that you do not go ahead and commit a similar mistake. Use the latest study manuals, revision kits, and make time to try and read through the technical articles that are usually published in the magazines that are sent to all the candidates from time to time by Zika. During the examination, what are some of the techniques that you have to take into account? So make sure that for DA8, you do not spend more than 45 minutes for a 25 marks question. For CA 2.1, you do not spend more than 36 minutes for actually a 36 marks question. Some of the plan that you need to actually implement, if you're going to start a DA8 question, for example, writing at 09:15 hours, make sure you do not go beyond 10 hours. If you're going to start a particular question at 10:01, make sure you do not continue writing beyond 10:45. And the questions are going to be labeled usually in the order in which you are going to answer them. That is what you do in the 15 minutes reading time, and strictly adhere to the order that you could have put down and the timings that you could have written down. It will help you to attempt all the questions that have been put in that exam that you are required to attempt. Take note that questions need not be attempted in chronological order. What do I mean by this? It's not like in the exam you need to answer question 1 and then go to question 2, question 3, question 4 in that order. What you do is scan through the whole paper in the 15 minutes reading time and label which question is the easiest to you, whether compulsory or not. And make sure you start with the easiest question that you are most comfortable with. Why do we have to do that? You tend to spend less time to complete an easy question to yourself. If you are going to start with a most difficult question, you may spend time that you could have spent to answer 2 questions, but to just answer 1 question. So it's a very good strategy to start with the easiest question. You give yourself a chance to be able to attempt all the questions, which is a very important expectation of any financial reporting candidate. In section B, the questions mainly come from individual accounting standards. And this area has continued to actually record quite some poor performance over the years. And it is the reason why in this presentation, we'll concentrate on trying to emphasize on what you are required to do for some of these Section B type questions. Candidates need to prepare themselves for Section B type of questions adequately. But what has happened in the past is that a lot of candidates just ignore individual standards altogether and concentrate on group financial statements as well as a single entity company account. The moment you give yourself a chance to only comfortably answer 2 questions, the chances of you passing the exam are very slim. Why? There's no guarantee that you shall get everything in those 2 questions. And so it's important to balance up what you prepare for the exam. The use of the 15 minutes reading time. What is it that you're supposed to do in the 15 minutes reading time? Read through all the questions, tick those that you wish to answer, especially in Section B. Automatically, the Section A questions must be answered. Number the Section B questions in the order in which you wish to answer them. And the clue here is that whichever you think is the easiest to you, it must be labeled number 1. So attempt that one first. Whichever is second easiest, it has to be the next one to be answered from the Section B type questions. The more difficulty questions, they take a lot of time to actually answer, and hence they disadvantage you when it comes to achieving a pass in this particular exam. As financial reporting candidates, what are the general competencies that are expected from you? I wish to remind all of you, take time to go to the syllabus and the expected learning outcomes under each particular topic. So what it is that the expected learning outcomes will give you the general competencies that are expected of you to achieve success in these exams. So firstly, the competence of being able to describe conceptual and regulatory framework. How comfortable are you with the topic areas, conceptual and regulatory framework? And this one is a highly examined area. Make sure you can describe, talk about the characteristics, definition of assets, the regulatory bodies, ISB, IFRS Interpretations Committee, IFRS Foundation, and what are their functions. You are also required to understand the preparation of single entity financial statements as the next important competence, and this one is a subject of a full question, 20 marks or 25 marks for DA8 as well as 2.1. You are also required to know the interpretation and the analysis of the financial performance of an entity. So how comfortable are you in that area? You need to acquire basic understanding of consolidation. Consolidation involves a group of entities, parent, subsidiary, associate, and others. How do you prepare financial statements to incorporate all of them? And also to identify issues involved in preparing financial statements for public sector entities. These are the important competencies that you make sure that you have before you go to this particular exam. What are the common command words that are used in financial reporting papers when examiners prepare examination questions? So there is what we call Bloom's taxonomy that gives us a hierarchy of these common command words. The first level, which is low level, that is usually used for simple, straightforward questions, remembering, where you may be asked to identify, define, write brief notes on A, B, C, D. So make sure that if a question is asking for writing brief notes, you write brief notes. If it is asking you to identify, make sure you identify by merely listing what is being asked of you. The next level is understanding. Understanding is a second level, which is improved level to that of remembering. Under this one, you may be requested to distinguish between variable A and variable B. What are the many differences? Explain what this particular item exactly means. So provide brief facts about what you know about this particular item. There is application where you need to use some knowledge to be able to actually compute something, to be able to calculate something. So for example, you have learned about these individual accounting standards, and then a question will come and ask you, give you a transaction and ask you to account for this particular transaction according to that particular standard. So you are expected to have basic knowledge, use that basic knowledge and apply to a scenario and be able to state, as a result of the principles of this standard, so much needs to be recognized in profit or loss as income expense, so much needs to be recognized in statement of financial position as asset or liability. That is application. You need to use basic knowledge and obtain further treatment of a transaction from a given scenario. Also analysis, like we normally do ratios and analysis. When you calculate ratios, they are not enough to tell us what the performance of an organization is. So someone needs to interpret those ratios. So in interpreting, you need to make analysis, compare the variable from another, and look at what movements are taking place from one year to the other, and what factors could contribute to those movements. You are analyzing. So that is the analysis level of Bloom's taxonomy. There's also evaluating. Give a value to what has happened, meaning say what has been done, whether it is correct or not correct. If it is correct, why? If it is not correct, why isn't it correct? So you are evaluating a situation. Sometimes it requires you to state whether a given accounting treatment is actually correct or not, and why you are saying it's correct, why you are saying it's not correct. There is also the last level of common command words, creating. When you are told to compose, to combine, like in consolidation, you have to be creative. Apply the basic principles and combine correctly. Okay? You need to formulate something. So you are given some background information and come up with the correct output out of that. So that is at a higher level of Bloom's taxonomy. So please make sure that you look out for command words in a question and you address them correctly. The next thing I want to talk about is highly examined accounting standards. So in these financial reporting papers, we basically cover the majority of international accounting standards. Some of them are highly examined, some of them they trail behind others. So which ones are those that are highly examined? Talk about IAS 1, IAS 16, IFRS 16, IAS 37, IFRS 15, IFRS 9, IAS 12, IAS 28, 27, IFRS 3 and 10, which are all on consolidation. You cannot, as a financial reporting candidate, go to an exam without knowledge on these highly examined standards. You can't afford to do that. The moment you do, the chances of you struggling are very high. And when you go to an exam room and you struggle so much, the chances of not making it are too high. So do not risk. If you do not study maybe a standard like IAS 2, you may, yes, fail to do one or two things in the exam, but the effect is not going to be too much. But for instance, you go to an exam room without any knowledge about IFRS 9, 16, IAS 16, your chances of struggling with a lot of things are very high. So what I want to do right now is to actually talk about the common mistakes that are usually committed by candidates in this particular exam. And in my talking about this, I'm going to make a few illustrations. So these illustrations are actually going to be bordered on what has been discovered by the examiners in the past exams, which has been reported in what we call examiners' reports. So I'll take a few moments to make a few illustrations to you so that we can share what you should avoid if you are preparing for an exam right now, anytime soon, to make sure that you are not going to be caught up in that web of those that have committed these offenses. So some of the mistakes that have been extracted from the examiner's reports, I'll start with consolidation question, and this one is from the September 2022. What were some of those mistakes that were identified? So the first one is failure to show all relevant workings either within or outside the statement by the candidates. So for example, if you look at consolidated statement of financial position, the way we prepare it, mainly we add assets, liabilities of parent subsidiary, but for some items like goodwill, retained earnings, non-controlling interest, carrying amount of investment in associate, we need to do workings. And it was discovered that some candidates could afford to do no single working, but they just post totals in the main statement. When you do that, you disadvantage yourself greatly as far as achieving greater marks on this particular question is concerned. The other thing is that candidates have been discovered to actually add the share capital of the subsidiary to that of the parent. So in consolidation, when you are given a question, for example, where you are told parent subsidiary and the share capital is 1,000 for parent and 800 for subsidiary, we are required to only incorporate the share capital of the parent and exclude the share capital of the subsidiary. So the common mistake is just because you do additions for all assets and liabilities, and some candidates continue to also add the share capital. That is wrong. So please let us learn from that. Another mistake extracted from the examiner's report involve taking subsidiary assets at a proportion of the parent's interest in the subsidiary company. So for example, if a parent owns or controls subsidiary 75%, and here is an item of assets, let's say PPE, 10,000 for the parent, and let's say 5,000 for the subsidiary. This common mistake involves candidates consolidating the 10,000 for the parent, and they will say plus 75% of the 5,000. This one is a wrong way to consolidate a subsidiary. Remember that when we say subsidiary, the parent has control. Having control, the subsidiary's assets and liabilities, incomes and expenses are to be consolidated 100%, meaning add them to those of the parent in the consolidated statement as though the parent owns everything about this subsidiary. Come and show to the extent the parent does not own the incomes, expenses, assets, liabilities by the NCI figure. So please avoid this type of mistake of adding all the assets at a proportion. Can you imagine if the allocation of marks was in such a way that you get half a mark for the parent's assets and half a mark for the subsidiary's assets? The moment you are going to get all the assets and liabilities at 75%, you lose out on all the half marks allocated to the subsidiary. They are lost because you could have actually incorporated wrong figures altogether. The other common mistake extracted from the same report is this one, that many times when the parent acquires a subsidiary, there may be some assets or liabilities that existed with the subsidiary which may not have qualified to be recognized by the subsidiary, but upon being acquired, the parent qualifies to recognize them. Commonly, these are internally generated intangible assets, contingent liabilities, unrecognized deferred tax assets, liabilities. When they exist with the subsidiary at the date of acquisition, the fair value rule must apply. They need to be incorporated and be recognized in the consolidated financial statements and ignore the rules that apply to the individual accounting standards that cover them. So this one has been noticed as a common mistake by a lot of candidates because internally generated intangibles don't get recognized according to IAS 38. You think they should also not be recognized in consolidated financial statements. No, the story changes. They need to be accounted for because they would have been purchased. Okay? Next common mistake that has been identified is misunderstanding of the use of markup and margin in the computation of unrealized profit. So here, what you need to understand is that in markup, the percentage of the sales figure is different from that in margin. So if you understand the description of markup, gross profit expressed as a percentage of cost, and margin is gross profit expressed as a percentage of sales. What you're supposed to do is allocate the percentage to the three items: sales, the cost of sales, and the profit in both markup and margin. Sales, the cost of sales, and profit. So by virtue of the definition, markup, gross profit expressed as a percentage of cost, cost is 100% figure. Margin, gross profit expressed as a percentage of sales, and sales is 100% figure. So what it means is that the normal mathematics must apply, that sales minus cost of sales is equal to profit. So if you are told a margin of 25% and you are told a markup of 25%. So in this case, what are the percentages for the missing items? So sales in markup, in this case, should carry a 125% and cost of sales should carry a 75%. So when you are given the cost of an intra-group trading transaction, you should be able to get its sales value. If you are given the sales value, you should be able to get its cost as well as its profit by applying the percentages correctly. So where you are given a markup and a sales value, if the sales value is 1,000 and you are told the seller made the markup of 25%, and you have been informed that 50% of what was sold is still in inventory, which represents a 500 because PUP is calculated on what is in inventory. So we are supposed to get the 500, which is in inventory, but this is a sales value. It will be carrying a 125%. We need to say what is a 25% in this 125% 500 figure for us to get the unrealized profit. But assuming for this same sale, the percentage is actually a margin, and we are trying to find the unrealized profit. So in margin, the sales figure is 100%. For us to find the profit element in what was sold, we are going to say 25 divided by 100 times the 500 goods remaining in inventory. So let us learn from this. It's a common mistake. When the question is talking about markup, someone will account for it like it was a margin percentage. And when a question is given a margin, some people will account for it as though it's a markup percentage. So learn from those mistakes committed by others and do the right thing. Another issue that was actually noticed from these exams, where candidates are given a theory portion of the question, like Part C, which required candidates to describe 4 circumstances in which a parent company may not be required to present consolidated financial statements. The comment by the examiners was that this part of the question was not generally well answered, and a significant number of candidates omitted it altogether. So what it means is it was a 10 marks question, and some candidates went ahead to lose out on all 10 marks. Why? Because a lot of candidates think accounting is only numbers. Accounting is not only numbers. You need to understand the theory, the principles behind those numbers if you are to perform better. So for example, this particular question, usually the answers are just very, very straightforward. If you have gone through the content of consolidation as a topic, you will never miss coming across the answers to this particular question. But in this exam, a lot of candidates actually showed a lot of ignorance, meaning we do not adequately prepare for theory type of questions. What is the other mistake that is usually committed by candidates as extracted from the examiner's report for CA 2.1 September 2022? So candidates tend to forget to time apportion entries when the consolidation question is involving the statement of profit or loss. What it is all items of income and expenses accrue over the year. Always pay attention the date of acquisition of the subsidiary by the parent. If this happened partway through the year, maybe 3 months into the accounting period or 6 months into the accounting period, you are not required to add the expense and income for the whole year for the subsidiary. So, by virtue of the period of time that the parent has controlled, if it is 9 months, get only 9/12 of each item of income and expense. If it is 6 months, get only 6 months out of the 12 of each item of income and expense. So, this one is a common weakness, very common weakness. Now, can you imagine? You are consolidating parent subsidiary, and so you are not saying parent here plus 9/12 of subsidiary. You are not doing that for all items of income and expense. You are simply adding them in full. And many times when acquisition of the subsidiary has been partway through the year, the mark allocation is in such a way that you are likely to have half a mark for the parent figure, which is copy-paste from the question, and you may have to be awarded 1 mark for the subsidiary figure because you need to apply the proportionate period of the year. And you will lose all the ones for the subsidiary just for this mistake of not proportionating the period of time for which the parent has controlled the subsidiary. It is extremely important that we actually check the date of acquisition and compare with the date of reporting so that we can apply the correct proportion to the items of income and expense for the subsidiary. The other mistake, as recorded by the examiners of 2.1, is that the candidates calculate the group share of all figures in the statement of profit or loss. So like I mentioned earlier, if it is a 90%, they apply 90% of incomes and expenses. That one is a mistake. And as you can see here, it was recorded in the examiner's report for DA8 as well as examiner's report for CA 2.1. So regardless of which particular specific program, it's a common mistake to all financial reporting candidates. Based on what I have just explained as the feedback from the examiner's reports on shortcomings in the way candidates handle the consolidation question, I wish to look at this particular question for 2.1, September 2022, and try and highlight some of those issues and make a correction using the questions. So this is poor and so, and some of the important items you look out for in a question if you are to correctly account for it. Check the date of acquisition, the date of reporting, especially when you are dealing with a statement of profit or loss. It is very important to know whether the parent has controlled the subsidiary's incomes and expenses for a full 12 months or a period less than. Many times, candidates ignore this aspect and they go ahead to just add the way they are incomes and expenses of parent and subsidiary. So let's see what is obtaining in this particular question. The date of acquisition is 1st April 2022. So 1st April 2022, PO acquired 60% of 4 million ordinary shares of SO. That is very important information, the date of acquisition. You need to also look out for the date of reporting. In this case, the date of reporting, you get it as the date for the heading for financial statements, either profit or loss or statement of financial position. So look at this. Statement of financial position, 30 September. Other than that, you may proceed all the way to actually the requirement. When you are told to prepare financial statements, it will be for the year ending this date or as at this date. That's the date of reporting. So compare with the date of purchase, 1st April 2022. So basically at reporting date, the parent controlled for a period of 6 months. 1st April to 30 September is 6 months. This has an implication as to the way you are going to consolidate the parent in the statement of a profit or loss. So like when you look at question A, prepare consolidated statement of profit or loss for PO for the year ending that. So I wish to highlight there are easy marks you get in a consolidation question by simply applying the date of acquisition and reporting correctly. You will end up saying the consolidated revenue here, for instance, is plus 6/12 of SO. Cost of sales plus 6/12 of SO. All of them plus 6/12 of SO figure. Administrative expenses the same, 6/12. Finance cost, income tax, everything that way. And I can assure you, when you lay out your answer in this manner, you are actually already on your way to achieving a lot of marks. But the common mistake, as highlighted earlier, is that many candidates will ignore this aspect of 6/12 and instead say 85 times 60% of 42. And for all these figures, they will add 60% of 32, 60% of 2000, 60% of 32, of 44, and so on, of 14, which is not correct. So you do not apply the percentage, but apply the proportion of the year for which control has been exercised. That is the important reminder on profit or loss, other than the usual calculations. So when we look at the statement of financial position, here are the numbers for the two, parent, subsidiary, and full consolidation of parent and subsidiary means add 100%. So for assets, they are accumulated as at a given date. You are not supposed to say times 6 over 12, 6 over 12. No. Assets, liabilities, the way they are, plus parent subsidiary, plus, liabilities there, plus. On share capital, parent only. Then under non-current assets, goodwill has to be calculated, which is a serious working. And remember, the other common mistake, as I explained earlier, those people that do not do any workings. So all they are going to do is get the sum of those figures in an easy manner. Many times they are leaving out any adjusting figures. And so those totals are wrong. And if you don't do any working, remember financial reporting is actually passed easily because you have done a lot of workings. And when you do a lot of workings, each figure in that working qualifies for a mark accordingly. And so if your workings are missing, a lot of marks are missing from your answer. Let us learn from these mistakes of other people. We need to do as many workings as possible. For example, working for goodwill, purchase consideration, NCI at acquisition, the net assets component at acquisition. That's a lot of marks, sometimes 6 marks, 7 marks. And if you don't do that working in your answer, 7 marks is out for you already. That's a lot. So avoid the situation where you do not do separate workings for questions like consolidation. Okay? I want to use this specific example on the issue of markup and margin. Note 2, I'll do a selection of notes. So sales from SO to PO in the post-acquisition period. So these were already in the post-acquisition, were 8 million. So made the markup on cost of 40%. So please, this was a 40% markup. You need to understand that in markup, sales in this case is going to be a 140, cost 100, and profit a 40 there. And then we are told PO Limited had sold 5.2 million as at 30 September, meaning the buyer sold 5.2 out of the 8 million worth of goods. So by simple mathematics, what it means is that 2.8 worth of these goods were in inventory of the buyer. And the fact that this is seen from the sales value point of view, it is also a sales value. What it means, this 2.8 is a 140%. To calculate PUP, we must get a 40 proportion out of this 140 proportion figure of 2.8. So our answer will be 40 divided by 140 times the 2,800. That is how we get our PUP. That is how we get our PUP. But if you wrongly apply markup as though it's margin, you are going to do this. You are going to say, what is 40 divided by 100 times 2.8? And the answers that you get will be very different. So please, you are reminded to make sure that you understand, the difference between this markup and margin. The other note in this particular question is a note on receivables and payables balance. Note 4. Okay? It was actually reported, even in the just ended exam, that candidates struggled seriously to account for cash in transit and goods in transit when it comes to intra-group balance cancellations. When these are straightforward because the amount of payable represented by receivable is the same, usually candidates have no problem. But the moment there's cash in transit or goods in transit from either party, it presents a case for a lot of candidates. So let us look at this one. So trade receivables at 30 September included 600,000 due from PO, which did not agree with PO's corresponding trade payable. This was due to cash in transit. So if we are talking about so receivables, and these are 600. Receivable from who? From PO. And so if the two figures are different because of cash in transit, who is supposed to pay who? The one who has a payable. And the one with a payable is actually PO. So what it means is that PO remitted cash 200, which So had not actually received. Okay? So has receivable 600. Automatically, the payable in PO payable, in this case, despite not having been provided, was a 400. Why? Because PO had remitted a 200,000. So it's like this. The two are not in balance. This is one area where candidates struggle. So cancellation should only occur when the two are actually equal. They are the same. So before they are the same, you need to make them same. How do you do that? One principle. We need to follow one principle. The principle is whoever has not recorded the transaction that has been initiated by the other, try to record it and see how the numbers will change. So from the point of view of So, who has not actually accounted for the cash dispatched by PO, their receivables are more. When you account for this, you are going to debit receivables for So with 200. Sorry, you are going to debit cash, not receivables. Cash for So with 200 and credit receivables with a 200. When you do this 600 will reduce to 400. So what's the implication for your consolidation? In your consolidated statement of financial position, you are going to say minus 200 from consolidated receivable figure to reduce the 600 to 400. And you are going to say plus 200 to the cash, consolidated cash figure, to increase the cash of So. After you do this, do intra-group cancellation now by reducing group payables and group receivables by a 400 in each case. That is what is supposed to happen. However, cash in transit, goods in transit poses a serious challenge for financial reporting candidates. Just assume the transaction is now identified by the one who had not identified it and record it. That's what is supposed to happen. Okay? So when we go to the requirement, again, preparing consolidated profit or loss statement of financial position. What are the easy marks in your statement of financial position preparation? So here, items like PPE, you will get the PPE for PO plus PPE for So. Open the bracket and put the two figures before any other adjustment. Come to current assets. Get inventory for PO plus inventory for So. Receivables, inventory for PO plus receivables for So. Bank for PO plus bank for So. When you do this, it gives you a chance to actually gain the easy marks before you even go to the adjustments and do the workings. Once you are done with the workings, all you will need to do is come and add or subtract what needs to be added or subtracted. Get some final figures from the workings and put them there. Carrying amount of investment in associate, put it. The other investments, put it. The final figure for inventory, put it there. Be reminded that in an event, one component that you have added to the items of inventory or subtracted is not correct, you will still get the marks for these easy components that are copy-paste from the question. This is why it is dangerous for a candidate to simply add the items on the calculator and just bring the totals here. Just bringing the totals here, it is dangerous. When you bring a total and this total is wrong, you lose out on the marks of the individual components that you added that are correct. So can you make sure you open the bracket, put those straightforward figures from the question before you can even commence your calculations. Remember full consolidation. The parent only share capital should come. For share premium, it will be the parent as well. Retained earnings is a serious working. This is a serious working. You cannot afford to just bring a figure or add two figures together. Non-current liabilities, get them the way they are sitting in the question, put them together, open the bracket, leave it open. At the end of it, or after you have done all the workings, check whether there are arising non-current liabilities that you need to add. In the absence, that total goes there. So use the brackets. You cannot maximize on the marks in financial reporting by adding your figures on the calculator and taking the totals only to the main statement. The examiner is not going to know the composition of that total. So you are better off list these components of that total in brackets or in workings. When you do that, whichever component that is correct will give you the marks that you deserve. We do not allocate marks in financial reporting to the total figures. We allocate marks to each correct entry that a candidate has put down. So the more you avoid the brackets in a consolidation question, the more you avoid the workings, you are basically avoiding gaining those marks for each component of an amount that is part of the final answer. So please be reminded and be urged earnestly here that use workings, use the brackets to actually maximize on the marks you get on any consolidation question. Many of the marks you get are easily obtained, provided you do the right thing. It is so pathetic to see a candidate in this exam who uses a calculator to add their figures and is only transferring totals on their final answer. There you cannot achieve a pass, not even 50% of the marks. It's very difficult. The moment your totals are wrong, then everything is wrong. Okay? So that is on a debrief of a consolidation question. Take note of observation from these examiners' report. And the other question that I want to talk about has got to do with question 2 type for DA8, and I'll be making reference to a March 2022 examination question. The examiner's report highlighted the issues as follows. In part A, for example, it seemed most candidates did not read the instruction relating to where to take depreciation, whether cost of sales, admin expenses, or distribution. So they took the depreciation figures to wrong category of expenses. So many times an examination question will tell you depreciation should be charged to cost of sales, admin, distribution, and follow those instructions. They are very easy instructions. to follow. The other observation was that some candidates treated bank overdraft, which is a credit balance, as a current asset in the statement of financial position as opposed to a current liability. So please, in fact, this one has actually been noticed as a mistake for a number of years. Many times when you are dealing with a trial balance, single entity published financial statements question, check where the bank balance is sitting. Is it sitting on the debit of the trial balance? Is it sitting on the credit? Please, if it's sitting on the debit, it's an asset. These are basic principles in accounting, that all assets will be on the debit of the trial balance and all liabilities will be on the credit. If it is on the debit, it's an asset. Take it as an asset in the statement of financial position. If it's on the credit, it's actually a liability, and take it as such in the statement of financial position. So take note that those that have gone before you have committed this mistake many times. Further, most candidates treated taxable temporary differences as a deferred tax liability. So this issue is common amongst financial reporting students. Please, when you are given taxable temporary differences, they are not a deferred tax liability or asset in themselves. What it means is that you need to apply the applicable tax rate on the temporary difference for you to get the deferred tax liability. Okay? That is why whenever you are given this note, you are also reminded the tax rate applicable. It's for your use to be applied to the taxable temporary difference. It was also noticed that a few candidates failed to recognize the production cost that was supposed to be part of the cost of sales rather than administrative expenses. Please, may we be reminded, some entities produce what they sell, meaning production cost should be part of cost of sales. Okay? Whereas some entities, they buy what they sell, meaning you may have purchases and issues of inventory opening, closing, but at this level, usually the trial balance gives you the cost of sales figure, which will be subject to some adjustments as appropriate. So please do not mistake production cost for an administrative expense. Another observation in this examiner's report was workings not numbered and neither transferred to the face of the main statement. So where you just throw workings on a page, where you just, as long as you are writing something, it may confuse the examiner. Even where you have actually achieved some marks, they may not be easily seen because the examiner has no idea which working, or rather which note the working applies to. So do not disadvantage yourself by not being orderly in the way you present your answers. Number your workings and even give the heading for your working. If you are doing a working for cost of sales, put it as a heading there, cost of sales. If you are doing a working for PPE, put a heading, property, plant, and equipment. It makes life easy for the examiner to know what figures are being generated for what note, and so where they are supposed to go. 2.1 September 2022, question 2. Mukezo, a manufacturer of clothing, has manufacturing plants in most regions. The following trial balance relates to Mukezo. And so one issue here that has been highlighted, look at bank balance. It's on the credit. It means when you do your statement of financial position, let it go to current liabilities and not current assets. But when it is on the debit, it's a current asset. Let's look at those notes. I want to start with note number 1. which says the 10-year-old land and buildings were revalued for the first time. Any note on revaluation, pay attention whether it is first time revaluation or subsequent. If it is first time, don't expect any revaluation surplus sitting in the trial balance. It's being revalued for the first time. Okay? And this revaluation is taking place when? 1st April 2021. This is very important to take note of. Date of revaluation, compare with the date of reporting. So the date of reporting is 31st March 2022, meaning this revaluation took place at the beginning, 31st March 2022, compared with 1st April 2021. It took place at the beginning of an accounting period. When it is like this, please take note of how you calculate your revaluation surplus. Get the cost from the trial balance. So where is this cost? So the costs are here. Land and buildings there. By virtue of the cost accumulated depreciation, these are giving us the carrying amount at the beginning of the year. So when you subtract, you get carrying amount. So this 57,000 minus the 96 depreciation for the building component, we get the carrying amount of land and buildings as 47,400, for example. So this 47,400 must be compared with the revalued amount at the beginning of the year, which is this amount. Okay? 113,400. So this 113,400 compared with 47,400, 114,400. The difference should give us revaluation surplus. If we were told revaluation took place at the end of the accounting period, if it took place on 31st March 2022, then we needed to first depreciate the buildings component for the current year before getting the carrying amount that should be compared with the revalued amount. That is what we should have done. So always pay attention whether revaluation is taking place at the beginning of the year or at the end of the year. This is where a lot of people miss out in obtaining the correct answer on revaluation surplus. And remember that once an asset is revalued, it needs to be depreciated using remaining life, meaning at the beginning of the year, check how much life is remaining and depreciate the depreciating asset by the remaining life using the revalued amount. Another note that I would like to talk about is this one. Note number 4. Included in revenue is 58.5 million cash sales made by Mukezo while acting as an agent for Kimina. The agency agreement provides for a 10% of the sales as commission for Mukezo. By 31st March, which is the reporting date, Mukezo had remitted to Kimina 52.65 million included in purchases. This is IFRS 15. IFRS 15. Please, when you look at a higher percentage for the preparation of financial statements, it's a higher percentage as a result of these individual accounting standards that you must understand and apply in answering this particular question. So how do you achieve more marks? By making sure you are comfortable with a number of international accounting standards. For instance, from this note, what are some of the expected calculations workings that you needed to do. So when you look at the sales for on behalf of the principal, it's an agency sale, and the commission is actually 10%. So the 58,500, the 10% there is 5850, of which when it is subtracted, we remain with that, which is 52,650. The rules of IFRS 15 are that only the commission should remain recognized in the revenue of the agent and not the other portion. So the other portion, which is this one, needs to be eliminated from revenue. So for this particular one, you just need two simple entries: debit revenue, credit cost of sales. So by debiting revenue, when you come to your answer format for this particular one, all you will need to say is minus that particular difference, which is a 52,650. Get the revenue figure the way it sits and minus 52,650 to get your final answer there. You do the same cost of sales minus 52,650, and you are done as far as that note 4 is concerned. Okay? Other items may not require any adjustment. Many times administrative distribution costs, you find that they need to come direct from the question to the answer. But of course, usually cost of sales has a number of adjustments that you need to implement. Let me just look at another adjustment in here. So for instance, note 6. Note 6 tells us that the financial asset, meaning in the trial balance, is an equity instrument whose fair value was 9750 on 31st March, which is the reporting date. By virtue of the fair value at the reporting date, already your statement of financial position figure is ready. There were no purchases or disposals of any of these investments during the year, and the instruments are held for trading. So if they are held for trading, what is the meaning of this? So compare the fair value at the beginning, which is per trial balance, with the fair value at the end, which is this 9750. The difference between the trial balance fair value and the reporting date fair value will be a gain or a loss. So if the fair value now is higher than the trial balance, the difference is a gain, which must go to the statement of profit or loss as a fair value gain. So for example, you may have to insert a separate item and say fair value gain of financial asset. Put it there. In the meantime, your statement of financial position will have an item, one of the items, financial asset, which is the 9650, the fair value at the reporting date. So it is actually your understanding of different individual standards that you build up to achieving higher marks on a published accounts question. Okay? So nothing more, nothing less for this financial asset note. You just need to know what should be my reporting date amount and what is it I take to the profit or loss. So in the profit or loss, if it's a fair value loss, you are going to put the amount in brackets. If it is a gain, you need to add to other items of income. Let's look at another note. For example, note 7. Mukezo issued its 4% loan notes on 1st April 2021 at their nominal value of 22,500. And the loan notes are redeemable at a premium on maturity in 2025 and have an effective interest rate of 8%. So when you go to the trial balance, at what amount is this loan note recorded? So here, the loan note, it's actually the same amount. After all, it was issued at the beginning of the current accounting period. So what we are supposed to do is actually get this same 22,500 and subject it to amortization. So what does it mean for amortization there? So here 22,500, which is the brought forward, we need to add the effective interest and subtract the nominal interest, which is based on the 4% carried with the title. Then we get the carried forward. So for example, the effective percentage on this loan is 8%, which should give us the finance cost. So look at here, 8%. So simple mathematics here, when I say 8% of that 22,500, I actually get 1,800. Then when I apply the 4% on the same 22,500, I get a 900. So nominal represents what is paid every year. The carried forward should be what you take to the statement of financial position. The effective is what you take to the statement of profit or loss. And so in this case, when you say 22,500 plus the 1,800 minus the 900, leaves us with a 23,400. Basically, this is all the working you need to get the figures that are required from that note 7. This will go as a finance cost, and this goes in the statement of financial position as a loan note. So when you come to your answer here, under non-current liabilities, when you say 4% loan, simple. That final figure, 23,400. When you go to profit or loss, part of the finance cost should be the 1,800 based on the effective interest rate. Maybe there are other issues bringing about finance cost. They have to be added to that figure. But by putting down your 1,800, you attain the marks that have been allocated to it. So that is basically what you do. Let me just look at the last adjusting note from this particular question. And this one is the note on income tax. So first of all, as we look at income tax, check what is in the trial balance for income tax. So I can see there's deferred tax, which is a 10,800 on the credit. It's a liability. Where is any current tax? Okay. So there's no current tax here. There's no current tax. So let's go to that note. Note 8. We are told a provision for current income tax for the year of 3,750 is required. Further deferred tax is to be increased to 12,600. So remember, the figure in the trial balance should be the opening balance on the deferred tax account. That 10,800 should sit on the credit of an account when you're doing your working. So this is income tax account. Income tax account. So when you say brought forward, sometimes it's possible you may have both current tax and deferred tax on the credit, and they should sit on the credit. So the 10,800 comes like this. The note for deferred tax will always give you the closing balance. So the carried down here, which is deferred tax, is the 12,600. But we have been told that the current tax should be 3,750. And so that is also a provisional liability. Let me get that amount again, 3,750. So here is the current tax, 3,750. In the absence of any relation on the movement in deferred tax to revaluation, then the entire movement goes to the profit or loss. So we are told that further deferred tax is that. There's nothing telling us that a portion of the deferred tax relates to any revaluation. In this case, to get your answer to go to profit or loss, get the missing figure between the two sides. So 12,600 here plus the 3,750 there is actually 16,350. When you subtract the 10,800, you actually get the profit and loss, the balancing figure 5,550. Now, let me say something. When you're answering your published question and you do this working like this, even if the figure you shall end up taking to profit and loss is wrong, because maybe one component is missing in your answer, in your working, you will not get 0 mark on income tax. By virtue of the correct entries you have made in the account, in the run-up to your getting the correct answer, you get marks for them. You may not just get the full marks, but you will get some marks. So please do not ignore carrying out workings for various notes in your question on published financial statements. This figure goes to the statement of profit or loss. These two are supposed to go to the statement of financial position. All these are separate marks altogether. For using the closing balances to get P&L figure, you get some marks. For taking the closing balances to the statement of financial position, you get some marks. So it is not easy to fail financial reporting when you apply the necessary basics. It is workings, and sometimes putting figures in brackets as you gather your financial statements, preparation information there. Okay? So I think on the preparation of published financial statements, I needed to just highlight on those few workings. As you can see, your knowledge of accounting standards are key to your good performance on a published financial statements question. That is why it carries a higher percentage when it comes to the weighting. Okay? So those are some of the illustrations. And one more illustration. I want to talk about the single entity. Rather, I want to talk about single standard related question. In section B, many times you will get a question which is on a particular standard. This is an example. This is an individual standards extract, question 3 DA8, December 2022. The question had sections A, B, C, D, but I think I'll just look at A, B. The reporting date was December 31st, 2021, and the transactions, A, for example, says on 1st January 2021, Zumba started the project to develop and produce a new drink. Expenditure of 50,000 kwacha per month was incurred until the project was completed on 30 September. And production of the drink commenced on 1st October. It became probable that the project would be successful on 1st April when Zumba received the test certificate from the regulator. The drink has an estimated life of 6 years. On a pro rata basis, you need to amortize. Required. So the issue is, how do you address this type of requirement? So this requirement says, explain the accounting treatment of this project for the year under review in accordance with applicable IFRS. So here, explain the accounting treatment of this project. Such type of questions have received very poor performance from a lot of candidates. Very poor performance. So accounting standards provide principles. That's what should form part of the explanation. Use those principles to try and compute what figures must go to the profit or loss and what figures must go to the statement of financial position. So if you understand IAS 38, for example, in this one, our reporting date is 31st December, and then the development started on 1st January up to 30 September. So the total period of development is 9 months. When you look at these 9 months, multiply by the cost that was being incurred per month, which is 50,000, it gives us a total cost of 450,000. So this is times 50,000, giving us 450,000 total cost on this project. IAS 38 gives us rules when to capitalize development expenditure, when to expense. And how do you know at what point you need to start capitalizing? So when we read on, it says expenditure of 50 per month was incurred until the project was completed and production of the drink commenced. So this is key in this question on 1st October. So we are starting from January 1 to 1st October there, commencement of production. So when you commence production, it also means that what has been produced needs to be amortized. So effectively, this question is actually telling us that amortization should only commence 1st October to 31st December, which is how many months? 3 months of amortization. When we read further, it says it became probable that the project will be a success. What's the essence of probable the project will be success? And the date is 1st April. What it means is that 1st April is the effective date of capitalization. So you start developing on 1st January. All the expenses incurred up to 1st April, they need to be expensed. But from 1st April to completion, they actually need to be capitalized. So here, it's like this. January, February, March, expense. But April, May, June, July, okay? July, August, September, which is 6 months, capitalize. So 50 times 3 months there gives us 150 to actually be expensed. And then the 50 times 6 months gives us 300,000 to be capitalized. And what's the period of amortization? 3 months, from 1st October to 31st December. As a matter of the rules in IAS 38. How do you capitalize? Divide by the 6 years, which are the life of what has been developed. So when you say 300 divided by 6 there, it's a 50. The 50 is per annum. But 3 months only, so times 3 over 12, it means 12,500 there is amortization. This to be subtracted from 300,000, okay? When you subtract that, it leaves you with 287,500, which should be the carrying amount of what has been capitalized. Now, the major weakness is that candidates attempt to do all these calculations I'm doing here and they end on just calculating. That is wrong. To effectively answer this question, provide relevant principles from an applicable standard. You do not necessarily need to quote the standard. You can even say per applicable standard or expenditure not meeting capitalization criteria must be expensed. In this scenario, it is a 150 because for the first 3 months, it was not probable that the project would be a success. But any expenses after it was probable that a project is going to be a success, all those costs are supposed to be capitalized. When what has been produced is actually put to use, meaning talk about the effective date of production, okay? Using what has been developed to produce a product. That is the time when you actually begin to amortize per the requirements in IAS 38. And so provide the explanation part of things and also provide the numbers part of things, you will be able to get the full 6 marks. Don't just say 150. In fact, if you don't understand the principles in this standard, you won't even separate this 450. Most likely you will just talk about the total development expenditure of 450 and it ends there. But that 450, part of it expensed, part of it capitalized. Say why. What are the principles? What's the guidance from the applicable standard for that kind of treatment? Okay, so in the profit or loss, amortization, development expenditure expensed, and carrying amount, all the rules talk about them. You could have explained the accounting treatment, not just calculating and leaving your numbers hanging without any supporting statements. You will fail to achieve the marks that way. Okay, so this is one area where candidates have generally not performed well, and you are hereby reminded to pay attention to all the individual standards if you are to improve on your performance in this paper. The next thing that I want to talk about, other non-exam related preparations. Avoid caffeinated foodstuffs just few hours before the exam. They leave you stressed during the exam. Make sure you have enough sleep a day before the exam so that you are fresh and you can think straight and not fail to actually comprehend a simple statement in the exam question. So take enough rest a day before the exam. Very important. Your resolution, in conclusion, from inception is key to your success. Be inquisitive to find out from those with a success story and build up your own. If you are going to familiarize yourself with people that are associated with failure, most likely you will also become a failure. So ensure that you actually associate and hear only the positive as far as these particular exams are concerned. I know many out there say financial reporting is hard, is it difficult? Don't get closer to such people, but get closer to those that say it's doable. Commitment at personal level can never be overemphasized. Ensure you receive tuition if you struggle to understand things alone. So I wish to thank you for your time and all the best in your next exam. They say never say die, meaning do not easily give up. Do everything possible that you can at your disposal to make sure that you can reach the end of the journey. Do not give up at the edge when you're about to arrive. You could have already invested a lot of energy, so never say die. I wish to thank you once more. Until next time, my name is Velena Skangwa once more.